welcome to today's Toggle Video Insights. My name is Jan, for those of you who are joining us for the first time, and I'm one of the co-founders of Toggle. And in today's, as in every other market trading day, we take a deeper dive into one of the insights produced by Toggle across thousands of US equities and take a look at what the likely driver and the direction of that move might be. If you'd like to see more of these insights, subscribe to our YouTube channel, or check us out at toggle.global, where you can actually also test drive the Toggle Copilot yourself. The focus today is going to be on Vale. It's a stock that, as you can see, Toggle has consistently highlighted bullish pressures for, and so far correctly highlighted the move all the way from 16 up to just a shade under 20. And in the latest one, we're going to take a look at the equity yields that, according to Toggle, are also suggesting that there is potentially quite a bit more upside to this stock price. Now, clicking on this insight card will take you directly to the actual article, which, as you can see here, begins with a quick overview that basically suggests that there could be as much as 37.5% upside within the next 6 months. Of course, it could happen quite a bit earlier, based on the similar occasions, 7 of them that Toggle had previously analyzed. So really what the system is saying is, look, there have been other occasions where equity yields were quite this high, which is the way to think about equity yields is that's the inverse of PE. So effectively that means that the price to equity ratio is actually, price to earnings ratio, is actually quite a bit below where it should be. And historically, that has been an opportunity to get into this particular stock position. Now, starting with 1966, the price could rise all the way to 2703. And again, this is the confidence interval where you would like to see the price to stay. It also suggests that it could hit that level quite a bit earlier. So this isn't saying that you need to stay in the position for 6 months. It's simply saying that typically it has reached this kind of price move within that window, but often quite a bit earlier. Now, at the same time, you also do not want to see the stock price go below 1597, because in that case, the odds of valuation still being the relevant driver in this case would have been significantly diminished. It suggests that something else might have changed that is currently more important for driving the price. And so this is the point to place a stop loss, or at a minimum reevaluate the thesis on this particular stock. Now, why it might move, you can take a look at this and you can see that there really haven't been very many occasions where the earnings yield was quite as high as it is currently, and that historically there have been quite compelling episodes of further rises subsequent to reaching this point. Looking at the past performance, you can also see that actually you would have made quite a good amount of money if you had invested $1 each time. So this is just to give you a sense of the past performance that consistently has delivered quite a good result, and that also that a lot of the returns were focused here on somewhere between 10 and just shade of 30% across the past episodes. So much about Vale today in the daily brief, which by now should already be in your mailboxes if you subscribe to it. If you don't, you can do so at toggle.global. We discuss just what and how you might be trading geopolitical events. We've had quite a lot starting from March of last year when the pandemic really hit home. And after that, you've seen also events in Russia on the border with Ukraine. You've seen events in China and Taiwan and so on. So as a trader, what do you do? To see it, take a look, and we'll talk to you again tomorrow.